Hey Bumpy Trades, I want to do a video analysis update on Apple's stock price. I was going to do my top 5 sectors for the entire fourth quarter. It was going to be a long, detailed video breaking down each sector, but then I saw 4 or 5 1929 analogs on FinTwit, and I thought, you know what, let's just talk about Apple's stock price in the short term. We'll talk about the Nasdaq too, really get down our levels, where are we, and most likely, where are we going. So the other thing I want to say is that this isn't the first time that everyone thought the stock market was going to crash right around a quad witching date, right around that new quarter. Everyone thinks the stock market is going to crash because of a fundamental headline, right? And I'm kind of being the voice of reason. So for anyone who's new here, we've been doing this for a while, right? Way back on the December quad witching date, everyone thought the stock market was going to crash because of the TikTok deal. So a lot of people don't remember this. This might sound like a joke, but the media was telling people that the stock market would crash because the TikTok app, right, that social media app TikTok, had not yet been bought by an American company, right? They said that's why the stock market's going to crash. I was getting asked about it, and I said, look, we really don't even need to worry about the bear scenario until SPY reaches 392, right? We know how that worked out, right? Then the March quad witching date, everyone thinks the market's going to crash because of the 10-year yield, right? Remember that, right? All of a sudden, everyone's an armchair economist, right? They're talking about the 10-year yield's going to crash the market. And I said, well, it looks like, Microsoft is at the 61.8% retracement of a clear 1, 2, 3, 4, 5 waves impulse. It has 0% implied volatility ranking percentile, and it's all over the bar chart, straddle, and strangle screener. So it looks like the large institutions are loading up option premiums while the financial media is telling people that the 10-year yield is going to crash the market, right? So we kind of figured, yeah, most likely the stock market won't crash while Microsoft is exploding, right? Lo and behold, it didn't, right? Then remember the June quad witching date, everyone thinks the market's going to crash. The media is running all these headlines about how Michael Burry says the mother of all crashes is coming. I actually got a text on the June quad witching date asking if someone should buy Leap puts. And we were kind of like, look, it looks like Microsoft, Nvidia, Apple, and Amazon, right? They're all about to explode. It's unlikely that the stock market will crash while that's happening, right? And of course, we had a huge rally this summer led by these 4 stocks. So let's trade the stock market as a whole. Let's look at Apple's stock price. It forms a clear, from this March 8th low, a wave 1 and a wave 2, right? And then it goes on a huge wave 3 impulse. So we know this is a wave 3 because in Elliott wave theory, we have passed the 161.8% extension of wave 1. So this is kind of a general wave principle rule, right? You see a clear impulse and a correction. If the next impulse goes past the 161.8% extension, most likely that is a wave 3 that is in progress, right? So on this chart, we know we have a wave 3. So we're looking to buy and ride a wave 4 to ride wave 5 higher. So up to today, what I've been saying was I thought that the wave 3, the large degree wave 3 had ended right around here and that this was wave 4. So I've been saying that 141 was a really tight stop, but if we held above it, then that was wave 4. We were going to go on a wave 5 higher to at least 162. Okay, and I've always said that 141 was a pretty tight stop because there was a scenario where if it was broken, we'd still be looking for a wave 4 to have ended. That's the scenario I think we're in right now. So we'll talk about that. Wave 4, typically, you're going to look for just visually wave 4 to retest the wave 1 high, right? And we have that pretty clearly right now. We have that pretty clearly on Netflix as well, which we can talk about in a second. But Apple forms a wave 1 and a wave 2, then has a big wave 3 impulse, and it's completing right now, in my opinion, an ABC correction. It's right at the 38.2% retracement. So generally speaking, wave 4 will retest but not break the wave 1 high. So that's what it looks like is happening right now. This is a wave 4 that is ending, and we're going to have a wave 5 higher that will be at least the length of wave 1 placed at the wave 4 low. That means we should hold above 137, with 135, the 61.8% retracement being, more of an invalidation level. And if that holds, we should see in the next 6, 7, 8 weeks, at least a wave 5 to 162. So I think 162 could be pretty conservative, and we're going to see why when we zoom out to the larger degree count. But for right now, it looks like this is a textbook wave 4 that is retesting a wave 1 high at the 38.2% retracement. Most likely, we're not going to close below the wave 1 high. We're going to go on a wave 5 higher that will be at least the length of wave 1 placed at the wave 4 low. So let's zoom out on the larger degree count, see where that would be in the bigger picture. So I think that from this, surprise, surprise, September 21st, quad witching date, isn't that surprising? It was a quad witching date. We put in this low. We have another wave 1 and a wave 2. So if this is wave 1 and wave 2, we've broken and closed above the wave 1 high. I believe on the larger degree, Apple's within a wave 3 right now that will take it all the way to the 161.8% extension of wave 1. That's about 171. So you can see that this is wave 1 and wave 2. We're within a large degree wave 3 that in my opinion should end around 171, in the bigger picture. This wave 3 looks like it's subdivided into 1, 2, 3, 4, 5 waves. So that's where we get this idea that the length of wave 1 on the smaller degree placed at the wave 4 low might give a conservative target for wave 5 of 162, but that eventually we're looking for 171, the 161.8% extension of the larger degree wave 1 to be reached for this wave 3, right? Then what happens? Does Apple have a super crash? In my opinion, no. That would complete wave 1, wave 2, and wave 3. We would look for a wave 4 to end between the 23.6 and the 38.2% retracement before we go on a wave 5 higher. So it looks like Apple's got at least a couple more highs in the short term and the medium term. For now, we want to see that we don't close below 137, 135 might be more of an invalidation level, and that the length of wave 1 placed at the wave 4 low should take Apple to at least 162, probably a little further than that to be realistic. So what's that kind of wave 4 rule? Well, we just talked about it with Netflix. This is probably also in the evidence category, right? We go past the 161.8% extension of a prior impulse, and now we are putting in a wave 4 that is retesting the wave 1 high right at the 38.2% retracement, right? So for Netflix, it's kind of in the evidence bucket. It's also, in my opinion, a pretty nice setup. We're going to go the length of wave 1, place at the wave 4 low. We're not going to close below the wave 1 high. So I said 555 to around 560 was the stop in the invalidation. We wouldn't close below either of these levels. This is wave 1 and wave 2. Wave 3 passes the 161.8% extension of wave 1. Now we're putting in a wave 4 that's retesting the wave 1 high. So it looks pretty clearly to me that Netflix and Apple are putting in wave 4. They're going to go the length of wave 1, place at the wave 4 low. That should take Netflix to around, 646, 650. It should take Apple to at least 162. And it's unlikely that the stock market will crash during that time. So I want to talk about the Nasdaq QQQ, what that might look like on a more updated version, given what we just talked about with Apple. Not too much changes. In my opinion, this is still pretty similar to Apple, a wave 1 and a wave 2, almost the exact same dates from March 5th to April 29th. This is wave 1 and wave 2 for the Nasdaq. And then it looks like wave 3 passes the 161.8% extension of this entire wave 1. So that means that wave 3 most likely ended around this high of 382. Now we are putting in wave 4 between the 23.6 and the 38.2% retracement. So right now, the wave 1 high is a little far, right? 342. That might be a little wide for an invalidation level for the Nasdaq. I think the 50% retracement of 349 is probably a level that bulls want to hold above. And if it does, it's almost identical to Apple, that this is a wave 1 and a wave 2. We ended wave 3, and now we're putting in wave 4 around the 38.2% retracement. We don't want to see the wave 1 high goes. We don't want to see the 50% retracement of 349 goes. And if that happens, then the length of wave 1 placed at the wave 4 low should take the Nasdaq QQQ, close to 400, right? So think about this from a psychological perspective. This could be the last bear trap before the Nasdaq goes to 400, right? So that would kind of make sense. I think it lines up with the wave theory right now. Let's talk about advanced market devices. If Apple going to 100, 37 and retesting the wave 1 high is the floor, I think advanced market devices might give us the pavement, right? What's really kind of the worst thing that bulls could see happen, right? I think right now, if we look at AMD, we see it's not really even that bad. From this low that we formed on May 13th, I think advanced market devices has a wave 1 and a wave 2. Then it had this big old rally that we were debating. Is this a wave 3 and a wave 4? Or is this another wave 1 and another wave 2? Right now, we're below the 50% retracement. What this very well could be is that this is another wave 1 and another wave 2. So the 61.8% retracement is kind of the place where if you're buying a wave 2, the 61.8% retracement is kind of the best place to go. And then typically the 78.6% retracement is more of that invalidation level. So this most likely for advanced market devices is a wave 1 and a wave 2, then another wave 1 and another wave 2. We're ending it right now around the 61.8% retracement. And we should see an explosive wave 3 of wave 3 to the upside. So one thing that has happened is that it looks pretty clearly like the length of this rally from about the middle of July to the very beginning of August will be replicated for this wave 3. So it could look something like this where, AMD is putting in wave 2 at the 61.8% retracement. It's going to have a big rally to 137. What we don't want to see is 92 go. Now let's talk about 92 for a second, because let's talk about the 78.6% retracement. If this is an ABC correction, what would happen if advanced micro devices reach 93, 92? Why am I saying it might give the true floor, right? The true floor for the market would be advanced micro devices going down to 92, 93. Now, I don't think this will happen. I just want to say what the floor would be. If AMD did reach 93 to 92, then this would be very clearly an ABC correction from this high. And then the length of wave A placed at the wave B high would be exactly where wave C is ending at exactly the 78.6% retracement. So I think Apple, going to 137 is kind of the floor for the market. But if the market was any redder than that, I think that AMD going to 92, 93, that would really be the floor, because that would be the length of wave A placed at the wave B high. It'd be exactly where wave C ended, and it would be the 78.6% retracement. Now, I've gotten burned waiting for the 78.6% retracement before, okay? I think most likely that AMD is putting in wave 2 right now at the 61.8% retracement. It's not going to be that generous and let hypothetical bulls buy at 92. I think it looks something like this. This is wave 1 and wave 2. This is another wave 1 and another wave 2. AMD is going to hold above 98. It definitely won't go and close below 92. And it's going to go on a big rally to the upside. That will be the length of wave 1, place of the wave 2 low. We should see AMD, in the fourth quarter go to 136 to 138. I've had more conservatively that would happen by the end of the first quarter since June, essentially. So AMD does look like it's going to go on another leg to the upside. I don't think it will go below 92, but if it did, then that would really be the floor. I don't think bulls could see much more lower than 92, because that would be the length of wave A placed at the wave B high, and that would be kind of like we're done correcting at that point, in my humble opinion. I don't even think we're going to get there. I think the market is pretty close to a bottom, and I think if we look at Apple, it's getting very close to retesting that wave 1 high. I think Apple can't, I don't want to say can't, it shouldn't go below 137. I don't think advanced micro devices will even make it to 92, and we're going to have an explosive rally to the upside. What we're going to see is that this most likely is a huge bear trap, in my opinion. I want to talk about NIO for a second, just to touch on some of these clean energy stocks. They got a little hit today, but NIO is still looking good. It's a wave 1, in my opinion, in an ABC correction that's ending wave 2. We're right at the 61.8 to 78.6% retracement. We're actually at exactly the 78.6% retracement right now. I think that NIO is a wave 1 and a wave 2 from that May 13th low. It's going to have an explosive wave 3 rally to the upside that takes it all the way to 70. We'll have a shallow wave 4 correction that goes to the 23.6% retracement. Then we'll have a wave 5 that will be the length of wave 1 placed at the wave 4 low. So this is what I'm looking for NIO. It's a wave 1, an ABC correction is ending wave 2 at the 61.8% retracement. We're going to go on a big impulse to the upside that will take NIO to 70. I'm looking for a big rally in the electric vehicles and the clean energy stocks this quarter. I just wanted to talk about NIO because it was down 4 or 5% today. Xlf and Xli, right? We've been saying that these were really kind of going to be great gauges for the market, and they're still, looking like they are wave 4 lows as well. For XLF, this is a wave 1 and a wave 2. Wave 3 went past the 161.8% extension of wave 1. So we said it looked a lot like XLF, the financial ETF, had put in a wave 4 low at about 34.90, and it was within a wave 5 higher. So the length of wave 1 placed at the wave 4 low would take XLF to about 43, and that we didn't want to see XLF go below 34. It's not below 34. I don't think it will get below 34. I think that this is most likely a wave 1 and a wave 2 for XLF. And that we're beginning wave 3 of wave 5 very shortly. So from this wave 4 low, we have a small wave 1. We're putting in wave 2 right now. This is another reason why I think we're pretty close to a bottom, is that I don't think XLF will go below 34. It's going to go on a wave 5 to the upside. This is wave 1 of wave 5 and wave 2 of wave 5. We'll see waves 3, 4, and 5 of wave 5 pretty shortly XLI was another one where we talked about it's at, basically exactly the 38.2% retracement is almost identical to XLF. We have a big wave 1 and a wave 2, a wave 3, and then an A, B, C correction. It looks like we're ending wave 4 right now for XLI. So we said that 95 was kind of that level. We didn't want to see XLI go below. We're not below 95. XLI still looks good. So does XLF, as long as it's above 34. And I think right now XLI is putting in a wave 4 low right at the 38.2% retracement. It will go on a wave 5 higher. That will be the length of wave 1 placed at the wave 4 low. And XLI will head to about 113, 114. In about a month and a half, 2 months, I'm expecting a rally for the industrials. I'm also expecting a rally for the oil stocks. We had a little bit of a pop from these recently, and I think that XOP, the oil ETF, gave us a lot of information that this was a wave 1 and a wave 2. We have that wave 3 that goes past the 161.8% extension of wave 1, and then I believe we put in wave 4 at exactly the 38.2% retracement. So remember that rule, that classic retest where wave 4 will retest the wave 1 high. It looks like that happened. So, I think if the bears really want to scare me, they'll get XOP below that wave 4 low of 71. I don't think they're going to do that. I think that wave 4 is in. The length of wave 1 placed at the wave 4 low will take XOP on a wave 5 higher to about 114. It's unlikely that while XOP rallies $30, that the stock market will crash during that time. In the same way, it's unlikely that, Netflix going to, 650 is going to happen during a time where the market crashes. I want to talk about Pfizer just because we have a lot of evidence across the market. And Pfizer's looking good. So this was a wave 1 and a wave 2. If I measure this, I can show you that this was the 61.8% retracement where wave 2 ended. We have this big wave 3, and now it looks like, again, another classic retest of the wave 1 high. So this is wave 1 and wave 2. This is wave 3. We're ending wave 4 at the 50% retracement. Right at that wave 1 high, the length of wave 1 placed at the wave 4 low should take Pfizer, and this is kind of a longer term idea, but I think it's also evidence in the short term that Pfizer's going to 58, it's going to 60 at least for this wave 5 higher. I really don't want to see 40 go in the short term, but wave 1, wave 2, big wave 3, and now wave 4 is retesting the wave 1 high, just like Netflix, just like Apple. It's the exact same thing. A wave 4 that is retesting the wave 1 high. So we're looking for a wave 5 higher to be the length of wave 1 placed at the wave 4 low. Pfizer would be a much longer term idea, but I just wanted to show kind of that evidence. Speaking of evidence, we also have kind of stuff that's already happened, right? So recently, the kind of narrative is that the whole market's been read. Well, it hasn't quite all been read. We've been talking about this idea, the Cathie Wood stocks, the growth stocks would start to outperform. We saw some signs of that. Now, growth got hit today, but last week, I think Pounder went on a wave 1 and a wave 2, and then we were talking about for a while the fact that this was in orange. I don't know if you can see it, the 61.8% retracement of wave 1. So once we broke above the wave 1 high, we would confirm this is a wave 1 and a wave 2, and we're within a wave 3 high right now. So Pounder did that. Pounder did break the wave 1 high. It confirmed that we are in fact within a wave 3 to the upside. That should take it at least to 33 before a shallow wave 4 correction and a wave 5 higher. So I'm looking for Pounder to go to 42 and maybe even 52 in the fourth quarter. It's unlikely the market will crash during that time. I'm still expecting a growth rotation. And FSLR is also kind of in this evidence bucket where we talked about how it was at about the 50 to 61.8% retracement of a wave 1 and a wave 2. And when it broke above this wave 1 high, it confirmed that it was within a wave 3 to the upside. So I think this wave 3 is, ultimately on the smaller degree, going to end at 112. We'll have a shallow wave 4 correction before we go on a wave 5 higher, right? So FSLR is a lot of evidence because we've even talked about it, while it was down here, that it was going to go on a huge impulse to the upside. So FSLR, Pounder, I think they're still in that evidence bucket. They're also great setups, or at least they were great setups when they had very cheap implied volatility that, the Cathie Wood stocks, we're going to get some money flown back into them. So, I think that Apple and Advanced Micro Devices are very close to, if not at, a bottom, right? So why don't we just go buy, a bunch of calls on AMD and Apple, right? Wouldn't that be a great idea? Because I don't think Apple's going to go below 137. I think it's going to go on a wave 5 higher to the upside. There will be at least the length of wave 1, placed at the wave 4 low. So why don't we go buy a bunch of calls on Apple, buy a bunch of calls on Advanced Micro Devices? Well, we can see right here, the implied volatility ranking percentile is 36%. That means that in general, option sellers have a big advantage over option buyers. Basically, in trading, you don't get money for predicting stuff that the entire market is already anticipating. So the market is already anticipating that Apple will have a large move. So you're really at a big disadvantage. I'm not saying it wouldn't work, but buying calls on Apple and Advanced Micro Devices when the implied volatility ranking percentile is above 30, right, the option seller is at a huge advantage, right? So this is where, shareholding traders would have a little bit of an advantage, and also institutional option sellers. If there were a way to play Apple or advanced micro devices with options, it would be a large institution that has a ton of collateral selling a cash secured put to take advantage of those, really juice premiums. Okay, I don't sell options, but that's just kind of something I wanted to say, that right now, buying options on Apple and advanced micro devices, even though I believe they're going to go up, the option seller is at a pretty nice advantage right now.